Hello, and welcome to another update video about AVAX. Yeah, just to look at the shorter time frame here. Obviously, yesterday I explained to you that we need to break above this structural resistance to get the pathway towards the area around $29 to $40 freed up. This is the next level, or you could say target, for this C wave of wave A. Yeah, what we explained was that what we're dealing here is, at the very least, okay, an ABC structure. It could become something more bullish, but the chart first needs to show that to us. So what we need to see is this ABC structure fill in, which would be a larger A wave, which could then pull back in a B wave, possibly with Bitcoin when Bitcoin does its wave 2, and then rally in 5 waves higher, which is what we would call a C wave. So that's a corrective structure. Okay, corrective structures are difficult to trade generally because they are just corrections. Okay, they are corrective structures. This here seems to be an impulse, which is why it's so aggressive. But even within corrections, you can get impulses. So what we're dealing with here is probably the C wave of this A wave. It likely is a C wave because of the impulsive character, even though I cannot really recognize the subwave structure very well, so we can take a look at that in a minute. But it also doesn't matter because I guided you yesterday and highlighted that typically such an A wave would top around the 29, well, around the 38.2 extension. No, not, that's a retracement. Around the 38.2 retracement, yeah, of this move to the downside. So that is the 38.2 retracement, typically a target for an A wave. I would be able to give you a more precise target, you know, had we a clear view of the microstructure of the move up, which we don't really have. So I'm looking at $29. That's not only the retracement, it's also structural resistance, the previous wave 4 high, okay, which is slightly above it. I think it's about $30.50, but sort of in this region, I would expect quite strong resistance. In addition to that, if we can also calculate the target by taking the length of the A wave here. We go to the low of the B wave, which bottomed around $8.50, and then the 1.618 extension is a key target. So that is at $30. So around $29 to $30 should be quite a decent area of resistance, and possibly wave A will finish there. If not, then it is also not entirely uncommon for an A wave to rally to the 50% retracement. That's at $40.13. So that would be the next target should we get a sustained break above 30. So 30, then 40. Quite easy to remember. And well, if we get above that, I would start to assume that it might be a little bit too aggressive for an A wave. It might be something different then. Okay, it could be that this is then already all of wave 2. Okay, so we will need to look at that then. But at the moment, I view this as some kind of a flat structure. So A, B, C, in which the B wave was an overshooting B wave to the downside. The C wave is extending beyond the termination point of the A wave. If we get a corrective pullback afterwards, and I cannot give you a support area for that yet, because this looks like it wants to go further, and it should do to reach this target area. Any corrective pullback afterwards could provide an entry point, yeah, to trade the C wave higher, for example, yeah. And let's look at the shorter time frame count. This is really difficult to determine what we've got here because of this structure. On some exchanges, this low, which was made on the 19th, 18th of October, was actually lower. So the low point could be here. It really is hard to say. It really is hard to say. But this would have been some kind of a wave 4. So if you're using, or if you're looking for some kind of a short-term support, micro support, then I would use the last wave up. I would draw the 50% retracement level. That's at $19.26. Or let's give it a bit of space. Yeah, $19.30. So if we see a break below $19.30, let me just add that, then this would be a first indication, only a first indication that this wave B has begun. but it would need to be confirmed based on what we have now, and the situation changes quickly on this chart. Based on what we have now, it would need to be confirmed with a break below $15.50. Yeah? So that's sort of what we can look at right now in terms of the Elliott wave structure. Overall, looking at the indicators on the daily time frame, of course, we're quite overbought. That's not necessarily a problem. But what you can already see, on the daily time frame. Yeah, so I just didn't, 1 second. Adjusting this. What we oftentimes see is that a third of a third wave rally, yeah, is the highest point on the indicator. So it already reached like 90. What we see now potentially might become a bearish divergence, which is then oftentimes the fifth wave. Let me rephrase that. In a third wave, often the reading is the highest. In a fifth wave, often lower than. So we could be in the fifth wave of the C wave. I don't really want to label it because I see it as unreliable. But that just indicates we could have a bearish divergence form here, which is, doesn't tell us it will reverse now. It just means, okay, we need to be obviously just on the lookout that at some point this B wave might start. But at the moment, it just, we don't want to get in the way of such a rally. So I gave you basically the next target point. I also gave you the point below which most likely we have a good perspective to say that, yeah, this rally is likely starting to, to fail, and we get this B wave pullback. Only if the pullback is corrective, it might provide an entry opportunity, but it will likely take some time, this pullback. It will take some time. This is a typical crypto rally, very aggressive though, but after these aggressive rallies, the pullbacks often, they are very time consuming. Yeah, similar to what we had here. I mean, this is even more aggressive, this move. As you can see, the move up that happened in December, yeah, this correction took ages. Now, if we assume a higher low forms, it might not take that long, but still it will take much longer than the actual pathway to the upside. Similar to what happened here, right? This was also an ABC structure, okay? So you see how quickly, between December 2020 and February, it just escalated, okay? Also here you had just an ABC structure. Now see, that gives you an idea, because a lot of people might wait for deep pullbacks. Now, see, this was also an ABC structure. It might just do a shallow B wave, okay? Just be prepared for that. That's why, B waves are very difficult to trade. So I'm not suggesting this will come down very deep necessarily. It could just be a shallow B wave. We get that, but it's not predictable really, okay? And then this formed eventually a larger ABC structure. So nothing stopping the price to do that again. We just have an A wave here, get a B wave, and they can be shallow, then a C wave up. If we then see an impulse down, yep, bearish. If we see another higher low and another ABC up or so, then we have a larger A, B. It's just not a very clear structure because it's just moving in corrections, but that can happen. Okay, so that's why we at every stage follow bullish support levels. Only if they break, we can really determine that we're heading down. At the moment, the trend is up short term. I gave you several support levels, and once we have some kind of a confirmed top in place in A, but we're probably likely not there yet, we can define support for B. Okay, that's my update about AVAX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.